Is the managing director of JTW International. And let's start with this manufacturing report that came out of the Mid-Atlantic yesterday. Not very sexy stuff when I say it, but obviously the market just got pounded on it yesterday because it was far worse than expected, and it raises fresh concerns about how quickly the U.S. economy is slowing.
Well, I think the real big issue is that we've known there's weakness in the housing market, and the question was when that would spill over into broader-based economic weakness. And this was really the first indication that it was hitting really the Northeast as opposed to just normally the Midwest. And that, of course, took the market somewhat by surprise, which caused the declines yesterday.
Now, the Fed, of course, they left rates on hold this week, and now several economists are expecting that they could actually start easing rates the first quarter of next year. Do you agree with that assessment?
Well, yeah, there's absolutely an opportunity and a probability for them to do so. I mean, if the economic statistics continue to show weakness and the housing market continues to show weakness, then the Fed will be prudent to be more aggressive to cut rates earlier than what most people expect at this time.
Even though the Fed is expected to cut rates next year, to me that really suggests that weakness, not strength. And the markets, all right, even though this week they're not as strong as they were last week, they've had a terrific rebound from their May-June lows, not only in the U.S., but of course in Europe as well. Stephanie was just alluding to the fact that yesterday we're near the May highs here in Europe. Do the markets have it right?
Well, I think you got to look at both the present and the future, and the Fed's going to keep their eye on the future while the market is naturally paying people and companies for better earnings now. So I think what the Fed wants to do is keep it going.
But the Fed, excuse me, the market's supposed to be a forward-looking animal.
True, but you know, price action in the near term has basically showed that not only have companies exceeded their expectations of earnings, but looking forward, they're also giving some positive guidance.
Because this has been a long bull market we've had. So do you think it's getting long in the tooth now? What are you advising your clients?
Well, I think what you want to advise your clients is continue to take a little bit more of a defensive position because the stock prices have run up quite a lot at this point.
And what do you mean by defensive?
A little bit more in cash, obviously, because when you have 5% numbers in the U.S. and rising rates in Europe, it's not an imprudent thing to do. And then also, you know, start to look at more different sector allocations in terms of where to put your assets.
Now, you advise very high net worth individuals, the Billionaires Club, and the Forbes list that just came out, the top 400, all were billionaires this year. So there's a lot of wealth in the world. A lot of these investors made their money either through technology or some by taking risk in other areas. But nevertheless, they want to preserve a lot of that money. So what are you telling your clients right now? You're telling them to get more defensive. But at the same time, what is their biggest concern right now?
I think their biggest concern is, as you mentioned before, stocks run up too quickly. I have seen consistent concerns about the housing bubble, specifically in the U.S., and really concerns that maybe the engine of growth outside the U.S. won't be able to pull the economies of the world going forward.
So very quickly, because we're out of time, if you and I were talking 6 months from now, is the market going to be lower or higher?
Good question. I think it would be higher with lower interest rates.
Terry Wattenberg, as always, thanks for your insight.
Thanks, Todd.
Ahead on Business International, a day after calling the U.S. President the devil, Hugo Chavez visits another part of New York. High flyer Richard Branson makes a huge down payment in the battle to reverse global warming. And it was a side beating, but it was a significant step toward restarting the Middle East plan for peace. Stay with us.